Hello and welcome to this week's edition of Conquering Retirement. I'm your host, Kristin Oakley, and joining me in the studio are 𝘁𝘅𝗀𝗏 and Peter Hansen, two financial advisors with Northern Alliance Financial based right here and serving the great state of Maine. Derek, Peter, it's so great to be back in the studio with you both. How are you this week?
I'm great. It's good to be here.
Good. And Peter,
it's been a while since we've done a few of our shows, Derek and I.
Yes.
I know we've been running along with them from the team, but it's been a little bit since Derek and I, so it's good to be back.
For sure. Well, it's always a joy to be with you, and I love your passion and dedication to really helping folks retire well. That's what this show is all about. And today, we are going to start off by talking about potentially the greatest problem facing today's modern retiree, which is what?
Well, it's, basically it's giving the folks that are working now the chance to save for their own retirement and make their own pension, which can be good or cannot be so great.
Right.
It depends on what you do.
Exactly. So what you're referring to is that big change that happened back with the Revenue Act of 1978, yes, where really the burden of retirement saving was placed on our shoulders. They started to do away with those defined benefit plans. A lot of those pension plans no longer exist. And now it's up to the American consumer to be contributing and saving for their retirement. And there's a little issue with that regarding Uncle Sam, right?
Sure. Well, of course, with the taxes, right? But only 12% of the population has pensions, and that's dwindling every year. Only folks that have been working for a company that they started at many years ago, if they're still there, they might have a pension, or if they've left, it's carried over, right?
Right.
But so many of the people that were coming in to visit us, they might have a 401k, an IRA, some savings and Social Security, but it's on them to figure out what's best to do.
Yep.
And obviously, that's why we have a career and a job, is to help assist with that.
Right.
Well, the one thing I want to say is that, Kristin, what's happening is we're playing a game today where we don't know the rules tomorrow.
Yes.
And truly legislative risk is at play here. You always hear about, first of all, taxes aren't going down.
Right.
We know that. And so where's the money going to come from? Well, there's a lot of folks who don't have retirement accounts or anything. There's nothing to take there. It's the folks that have done a good job saving for retirement, and it can be detrimental, and you really need to plan for it.
Right.
And there are ways to do that, and that's what we try to help folks do.
Right. Well, here's the problem. The majority of Americans have the bulk of their wealth saved up in these types of tax-deferred accounts. Maybe it's a 401k, a 403b, whatever workplace retirement plan that you've had offered, or a traditional IRA. And what's really frustrating about this is when these plans were created, we were told that this was a really good thing for us because you're going to put the money in today, you're going to get that tax deduction today, it's going to grow tax deferred, and then supposedly in retirement, you're going to be in a lower tax bracket when you're taking out the money. But is that really what's happening for folks today?
Well, it has been the case. However, if you expect that taxes are going to go up, that's going to cause a big problem. There are ways around it. There's things that you can do to mitigate the tax burden. But another thing you want to think of, everyone needs to think of, and they're not, is that there's usually three parties in every household's retirement plan.
Okay.
There's the two partners, the husband and the wife, or whatever the partners are.
Right.
And then there's the IRS. So there is a third party involved. And there's ways and things that you can do with proper planning to go ahead and mitigate the amount that's going to be going to the IRS, if in fact you think the taxes are going to go up, which I'm pretty sure that I think they are.
I think we can agree there.
Right.
Yeah.
I mean, that's the frustrating thing is I think we look at our nation's debt, $34 trillion and counting. To your point, Derek, the money has to come from somewhere. And I think for folks, let's say they have $1 million saved up and they think, yes, I've got $1 million in my IRA or 401k, but not all that money is yours because Uncle Sam is coming for his cut.
Yeah, there's something that even if you're not taking your money from your IRA. At age 73 now, for many folks, you have to start. It's called a required minimum distribution. So in your example of $1 million, let's say that the IRS at that year given is going to be 4%. That's $40,000 that the government's going to make you withdraw from your IRA.
Right.
What is that going to do to your tax bracket? And what if tax brackets have recently just changed or are due to change?
The other thing too is with RMDs, even though you can wait, they have gone up as far as ages go. They're going to go to 75.
Right. By the time we hit there, right?
They're going to go to
right.
75.
Yeah.
They are, and it's already set. But the problem is it may not make sense to hold off that long because there are a lot of other things at play here. You have to look at what your income is going to be subject to Medicare taxation as well. If your income is over a certain threshold, you're going to have to pay more.
Right.
And just where you are tax bracket-wise, it makes sense to really put an income plan in place. We try to help folks with that. And for a lot, yeah, maybe waiting till they're 73 or 75 makes the most sense. But for others, it doesn't. It makes sense to start to take a little bit out now because you're older.
Yep.
So you're going to have to take out more money because your
Right.
life expectancy is less, and so
Yes.
the government's having you take more money out.
Yep.
And there's also more money accumulated there. So that may push you into a bracket that is going to be detrimental to your retirement.
For sure. Well, what are some of the solutions? What can be done if someone's watching and they're going, yeah, I know I'm sitting on this ticking tax time bomb, if you will, right? What are some strategies that you're able to enact now for your clients to help them mitigate that tax burden in retirement?
Sure. Well, one of those would be something called the Roth conversion. And that's something that we have a discussion with just about everybody that comes in, if in fact it looks like they're going to have that tax burden. Now, we're not suggesting somebody go out and convert all of their qualified funds, their IRA monies, to Roth conversions. You want to do it systematically. And before we go ahead and make a suggestion to do a Roth conversion, we like to get the approval and a stamp of approval from a tax accountant or a CPA.
So working together with that person's CPA,
That's right.
right?
Yeah. So we're a bit of a holistic plan where we're going to meet with our clients. We're going to talk about budget, Social Security, tax ramifications, long-term care, estate planning, and in combination with Social Security, how is that going to affect their
Yes.
taxes in retirement?
Right.
So a Roth conversion is an idea, but it must be done properly. You want to make
sure.
sure that you get the stamp of approval from a
Right.
tax accountant.
Yeah, the other thing too is an income plan. I think that is probably one of the most important things. It's because failure to plan is a plan to fail.
Right.
If you don't have a plan in place, for the folks that are listening, if you don't have a plan in place, that's what we can help you do. Putting a plan in place, now the plan can change, and oftentimes it does because life can throw you curveballs
Life
and it
happens.
needs to change.
Right.
But having a plan in place, an income plan specifically, will allow you to at least have something that you can kind of go along with, and then as things change, we can make adjustments to it. And so, we want to make sure, and I think with everybody, every advisor out there, make sure your clients don't run out of money. I mean, that's a scary thing. And
Yes.
I think the scarier thing is, for someone who does run out of money is when they finally find out they are going to run out of money because
Yes.
they're too old to go back to work.
Right.
And it's too late
It's
at
too
that
late at
point.
that
So
point,
let's do things now to help to make sure that doesn't happen.
Right, for sure. I really appreciate that you all engage in that comprehensive, holistic financial planning process. You mentioned how Medicare premiums could be negatively affected if your taxable income goes up. Your Social Security could also be taxed. A lot of people don't realize that. Up to 85% of your Social Security benefit could be taxed. This is why you have to look at how all these pieces fit together and make sure that you don't inadvertently do a Roth conversion, take too much out, bump yourself up into a higher tax bracket. I mean, there's just so many different consequences, the trickle-down effect, if you will.
That's right. And for everybody that does come in, that's what we're offering today. For folks that do call and they want to come in, we're going to be offering a comprehensive plan for you, in which we're going to again talk about the budget, the Social Security, the tax ramifications, to make sure that the plan that you have is going to last for the rest of your life. You don't want to go it alone, and that's what we're offering today.
Absolutely. Well, I'm so excited for more folks to connect with all of you. And also, if they come in for that complimentary written financial plan, tell them what else they're going to be able to receive.
For folks coming in for that complimentary review, we have this book. CEO Lance Gilman wrote this not too long ago. It's called Conquering Retirement. And it's going to help you put that plan in place. It's going to help you to understand some of the things to think about in retirement. Lance is a retired lieutenant colonel, and so he sort of brings in some of his experience in the battlefield and in retirement, and it's a good book, and we're happy to give that to those folks who come in for a complimentary review.
Wonderful. Derek, Peter, thank you so much. I'm excited to continue today's conversation with you. But if you're at home and any of this is resonating with you, if you know that you might be sitting on a potential ticking tax time bomb, don't lose hope. There are proactive strategies that you can enact even now to begin mitigating your tax burden in retirement. Wouldn't you like to have the peace of mind of knowing you have a solid plan in place that's working together comprehensively for you? This is why the team of Northern Alliance is offering you that complimentary written financial plan. To claim yours, simply call that number you see on the bottom of your screen, 877-241-7430. Or if you have your smartphone handy, you're also welcome to pull that out. You can open up the camera app. Just point, click, and scan that QR code that you see there down in the bottom right-hand corner of your screen. That will take you over to a landing page, ask you a few short, simple questions, and then a member of the team from Northern Alliance will reach out to connect with you to schedule your complimentary visit that way as well. We've got a lot more to cover on today's episode of Conquering Retirement. Stay with us.
Our team at Northern Alliance is very diverse in terms of the services that we offer.
We do take a team-based approach.
We carry multiple licenses so that clients can do everything within the Northern Alliance financial team.
If it has anything to do with retirement, that's what we specialize in.
Budget planning, tax considerations, Social Security strategies, risk management, long-term care, Medicare, health planning, as well as legal and estate planning.
We really are a one-stop shop.
There's Lance Gilman, Peter Hansen, Jeremy Barnard, myself. We do have a staff that is great.
In Maine, we have multiple locations to cover the vast array of the state.
You know, you can come in and have a conversation in person. And a lot of people are looking for these days. Things after COVID have changed to more Zoom, phone call sort of things. And we'll do those things, but we appreciate and would rather have you come in person and have a conversation face to face like this.
We're pretty approachable, and we're going to listen to you. We're going to try to determine what your needs, your aspirations, those goals are, and then we're going to do everything that we possibly can to help you meet those goals.
It's lighthearted, it's carefree. We laugh like crazy. An atmosphere that I don't think is common in a lot of other practices.
We were talking about how well the team is bonding together, how similarly we all think in that what we do, we want to actually make a difference.
Average, everyday people helping average, everyday people.
You know, we truly do put the client first.
Our mantra has been, when you take care of people, people take care of you.
Welcome back, Maine. You're watching Conquering Retirement, brought to you by the team of Northern Alliance Financial. I'm Kristin Oakley here with both Peter Hansen and Derek Hewitt from Northern Alliance. And we are talking about a lot of things that are going to help empower you to make sure that you can conquer retirement. And I think that word conquer, it's a very strong word, right? But we want people to live the life that they want to live. That's what this is all about.
Yeah, it's a problem that needs to be solved. You don't want to go it alone unless you're a retirement planner yourself. And if everyone was, we wouldn't have a career. But there's a lot to it. There's a lot to retirement planning that people aren't necessarily thinking of. So that's our whole goal behind this and our educational workshops that we hold, as well as the radio show that we have, is getting these ideas out to people so that they know there's more to it than perhaps what they're thinking.
Yes.
You want to do it right. You want to do it one time and make sure that that plan's going to last.
Absolutely. Yeah. Well, let's talk about something that a lot of people are thinking about these days, and that's inflation. All you have to do is go to the grocery store, go to the gas pump, and it's staring you smack in the face. And this is really interesting because this wasn't really an issue that was on the top of people's minds until the last couple of years. So talk about where we are and what concerns you see folks having as it relates to inflation.
Yeah, inflation is something that any advisor has to plan for. It exists, but it exists more so today than it has in many years. And so, you know, I like to plan for at least 3% inflation in any projections that we do. That was before, you know, now.
The last couple of years, right.
Yeah. But I mean, even with the projections that are coming up now, when you're looking at the CPI reports that are coming up and then showing that inflation's closer to 3% now, I mean, is it really? You know, when you go to fill up your gas tank, when you go to buy a car, you go to buy a house, eggs, you go to the grocery store, I mean, you're looking at 10, 12% with some of these. It's much higher than what they're showing. And I think that's really what people are feeling. And so you have to plan for it. And there are different ways to do so. But I think, you know, not having that top of mind is certainly going to be an issue if you don't, especially now.
Yeah. Well, I have some statistics I'd love to share. And you know, the long-term historical rate of inflation has been around 3% per year. And at that rate, the cost of living doubles about every 20 years. So let's say that you need $100,000 a year to live off of now. That would mean that 20 years from now, you need $200,000 in order to buy the same amount of goods and services that you're purchasing today. But here's what's interesting. With recent inflation rates, for example, in 2021, 7%, that means it only takes 10.5 years before you're going to need twice as much money to live off of. In 2022, it was 6.5%. That means 11 years. So think about that. This cost of living doubling that much more quickly, this is a problem, especially for retirees on a fixed income. Yeah,
that's something we have been thinking about for a good period of time, ever since we saw that the feds have to raise interest rates to combat inflation, which is really what they need to do, right?
Yeah.
You know, there's a term that we on the team have been using, and it's called refinance your retirement. Refinancing your retirement, much like when rates are low, people will refinance their debt, right? If you have a mortgage and rates drop, what do people do? They go and they refinance their mortgage.
Right.
if you have outstanding debt, again, and the rates drop, you want to go ahead and try to get that down by refinancing. Well, there's things that you can do to refinance your retirement when rates are high, when rates are up.
Yeah.
If you own certain products, things like annuities, that may be a good time to give a call and say, okay, let's look what they're talking about. How do you refinance that? Well, some of the rates that exist when you purchase an annuity stay with that product for its life. But when rates are high and you buy something like an annuity, well, the rates will stay with that as well, even when rates start to drop or certain benefits from that annuity. So that's things that you can do to get in front of it.
And that's so important. We're in such a time-sensitive conversation with this right now because this window of time, we hear the Fed might be dropping rates at some point this year. But if someone can go ahead and lock in those higher rates, then it's done, right?
Yeah, and I think a lot of folks have been doing that in some sense with CDs. That's a perfect example of what we're talking about. Now, we may not be talking specifically about CDs, but it's along the same lines. It's these guaranteed rates of returns that you're getting because these higher interest rate environment allows these companies to capture, a bigger return. So they're, passing that on to the customer. It certainly is a matter of time getting this done. Rates are going to go down. They've talked about 3 rate cuts this year, and that's gone down to 1 to 2. It's going back and forth. But one thing I think we can all agree on is that it will go down possibly by the end of the year. But the rates are going down. They're not going any higher. And so capitalizing on these things now is certainly a good thing to do because once they go down, then it's over.
Yeah.
One thing that's interesting is a lot of folks that are watching the shows and are listening to our radio show, they will call, make a complimentary appointment, they'll visit with us.
Right.
And one of the questions we ask them is your current advisor, should they have one, talking to you about the phrase refinancing your retirement? They say no, that's what got us to call.
Wow, yeah.
Which is too bad because there's so many opportunities. Derek mentioned a bank. Now, my parents were bankers. And I remember in the 80s, my aunt would give me $100. We were right at the bank to go get 8-9% in a CD. Now, you can't get that yet, but in a bank, you might get 5.5 for a period of time.
A lot of money market accounts, right, are doing that.
Yeah. High interest money market accounts. However, a bank is never going to give you enough interest to even keep up with inflation. Otherwise, the bank isn't making any money.
Right.
But there are some things that you can do to refinance your retirement and hedge against the current rate of inflation, which I think is more like around 6.5 to 7%.
Right.
Yeah.
Well, you mentioned annuities, and I know that a lot of folks watching, they might have an existing annuity contract that they got a few years ago or several years ago. So they would be in a good position to potentially change it? Can you 1035 exchange it? How does that work to be able to refi your retirement in that way?
Yeah, so for folks that have an existing annuity contract, what we first want to do is look at the contract and the most recent statement to analyze everything and make sure that we're putting you into a better situation. Oftentimes, we're able to, 3 years ago when the rates were, lower, they just didn't give the same benefits that they do now.
Right.
A lot of companies are offering bonuses, and I have many clients that we went back and been able to put them in a better situation, allow them to get a higher income if it's an income benefit annuity, and then some that were just using them as a builder. I like to say it's like a CD on steroids. It's they don't necessarily need to take an income from it. They just want a place to park their money that's safe, like a CD. Except with the rate environment we're in right now, you're certainly getting a much bigger benefit from an insurance company than you are from your local credit union in the form of a CD.
Right.
It's also tough with CDs these days. Go to a bank right now and try to get a interest rate that's higher at 12% than it is at 12 months than at 6 months. You're not, because they know the Fed are going to start to lower interest rates.
Because that's a short-term investment, right?
Yeah. So they're really, I mean, 6 months, you're not going to get the same interest rate at 12 months. They know they're going to lower interest rates, and they just don't want to lock in for that long. So there are other things that we can do.
Yeah, for sure. And again, this is just one of the many tools that you have at your disposal to help folks figure out how you could be in potentially a better financial situation. So, you never recommend you put all your money into something like an annuity, right?
Correct.
But for a certain individual, if it's suitable for them and it's the right tool for the job, it can be a great fit.
Yeah, annuities, I don't want to say it can be a dirty word, but people have misunderstandings of annuities. There's many different types of annuities.
Right.
There's variable annuities, there's fixed annuities, there's hybrid annuities, and one may be right for an individual client, and another type of annuity might be right for a second client. So that's where the individual consultation comes in to say, does an annuity make sense, even if at all? And if it does, what kind and for how long? So every case is different.
Yeah, for sure. Well, I know you said you've been meeting with a lot of folks who've come in specifically because they're hearing that term refinance your retirement, and it's really resonating with them. If someone is newer to that concept and wanting that second opinion, what would you say to them?
Yeah, I would say give us a call. And what we would do is have you come in for a consultation and to look at and educate us and you about where you are and see what we can do to put you in the right place. And so if you have an annuity, we'll analyze that along with your portfolio and run what's called a quantity report, a Morningstar report. We do our due diligence and educate ourselves as much as possible, and then we pass on education on to you. So that way you can understand where you are, and if we can help you get to where you need to go, we're going to go over what that might look like. So, give us a call. We're happy to have a conversation. And for folks who do come in, we are offering this book by our CEO, Lance Gilman, Conquering Retirement. It's a great book, education piece that talks a lot about what we do.
Wonderful. Derek, Peter, thank you so much. To our viewers at home, again, that number to call to claim your complimentary written financial plan and your free copy of the book, Conquering Retirement, is there on the bottom of your screen, 877-241-7430. Or again, you're welcome to scan that QR code and that will get you connected as well. We'll be back with more after this.
When interest rates are low, you might be able to refinance your home, your car, even your credit cards. But when interest rates go up, it may make sense to refinance your retirement. Higher interest rates could provide income opportunities you may not even be aware of. What works for you and your portfolio during low interest rates may not work for you when interest rates are high. Find out if a retirement refi could work for you. Call today for your complimentary Refi Your Retirement.
Well, welcome back to Conquering Retirement. I'm Kristin Oakley here with both Peter and Derek from Northern Alliance Financial, based right here in Maine, and a great conversation we're having today about a lot of the different challenges that retirees are facing and how we can get in front of those challenges and conquer them, right? That's what this show is all about. But I would love to ask you guys now, too, your opinion on, this is an interesting year. It's an election year. It can be hard to sort through all the noise and all the buzz that we hear about what the markets may or may not be doing, what the economy is or isn't doing. But are there any indicators that you really feel like people need to be paying attention to?
Well, I'll tell you, I'm a little biased with regards to what the market's doing and or who we have for a president or what administration is in the office. And what I mean biased, I mean, if you have a comprehensive plan, it shouldn't matter if the market's going to dump 20%, because you have certain vehicles within your portfolio that can mitigate or at least mitigate, if not thwart downside. Whether there's a Republican in office or a Democrat or the Republicans have the House, that really shouldn't matter if, in fact, you have a properly built portfolio. Right. Because when we build portfolios, we're building portfolios expecting there to be 2 to 3, sometimes 4 more market downturns within somebody's lifetime. There's things that you can do, tools you can use, and tactical wealth management, which helps mitigate downside more so than trying to double your money. Most of the folks that we meet with, their whole goal is to try to protect the assets that they have for the rest of their life.
Right, they don't want to run out of money, right?
That's everyone's greatest fear, is running out of money. Or do I even have enough? Well, let's take what you do have and go ahead and put on those comprehensive plan in which it doesn't matter, which person is the president. We have something to mitigate that.
The other thing, too, I also tell folks is that we are long-term investors. Long-term investors are what we do. We invest for the long term. We don't do short-term things. And honestly, I think a lot of people will agree this is going to be a volatile election, more so than before. I mean, everybody basically agrees with that. It's really volatile. And so that brings volatility in the market. But one thing that people need to realize is that in an election year, the market, I don't have the stat, it might even be 10%, but the market is up. Every election year, the market goes up. Doesn't mean it goes down at one point, because it does. That's volatility.
Well, the market only does one of two things, right?
Exactly.
It goes up and it goes down. We just don't know when.
So we're not going to try to time things. We know where it's going. So, we get questions from a lot of folks, a lot of clients. What are we going to do short term? Well, we have a plan in place. And the plan is not trying to time things, right around election time. We understand the volatility's there.
Right, for sure. Well, this is actually my third presidential election to go through since I've been in the industry. I know you guys have been through a few, and it's just really interesting. There's a lot of data that does support that the markets don't care, to your point, Peter, who's in office. And it is so key to stay the course. And just to tune out, you can tune out the noise when you realize, okay, I have a solid plan in place. I know I'm on track to reach my goals. But you mentioned running out of money, and of course that's the #1 fear, I think, of most retirees. When you are building plans for someone, how far out are you building them, to what age, and what things are you able to really build in to help someone be confident that they're going to be okay and they're not going to run out of money?
I like to build plans out to somebody living to be 110 years old.
110, wow.
You know, it could
Yeah,
happen. But
yeah.
and with doing so, let's say somebody lives to 89, well, that means that there's still something left over for the kids or the
Yes.
grandkids. But that's the goal, is to, the worst problem somebody could have would be to run out of money. So why not build a plan that's going to anticipate that you're going to live beyond 100 years old?
Right,
And
right.
again, with certain vehicles, you know, there's certain income plans which will never run out of money. There's things you can do, and that's the annuity word that we were talking about earlier.
for sure, yeah.
Again, somebody should educate themselves on what that means, to give us a call, and then we can explain what annuity, if any, makes sense for you.
Exactly.
See, the other thing too, when they're putting together a budget and we're looking at their expenses, you know, I want to overestimate things. I want to assume that you're going to need much more money than you do. And so that's the other thing that comes into play when we're putting together an income plan, because that makes it much easier. You know,
Right.
if inflation is up, then, you know, listen, we already have it budgeted that you're going to need, you know, much less money than we put in there. But we're still
Right.
going to kind of plan that way.
Yep.
It just gives us more flexibility.
For sure. And then you can make adjustments.
And then we
as
can
you
make
need to.
adjustments. And
Yeah.
adjustments are going to happen in any plan.
Right,
And they do.
of course, yeah.
Yeah.
Well, we started off today's show talking about one of the biggest problems facing today's retirees, which is taxes. And the other thing I think that's so valuable when you put together a solid income plan is you have that withdrawal strategy in place. So when folks do need to withdraw income during retirement, they know how to do so in the most tax-efficient manner, right?
That's right, and again, that would be taking into account that oftentimes the majority of assets are held in qualified plans, which means taxes have been deferred until you start withdrawing them, which seems to be a great benefit. However, it could be more than a burden when in fact you are required to draw those assets out, and it could bump you up into another tax bracket. I know we talked
Right.
about that in the first segment,
Yeah.
but that's a serious concern worth talking about again.
For sure.
So again, have a conversation about the Roth conversion. You know, is it right for you? And how much? Again,
Right.
don't go it alone. Get the help of a fiduciary financial planner to do that.
Yeah, absolutely. You know, as I think of what we talked about today, I could almost sum up today's show as taxes, inflation, election, oh my, right? This is why you need to have that solid plan in place, for sure.
Yeah, absolutely. And for folks that call in that are looking for an income plan, a withdrawal plan, who don't have a plan and are looking for some structure and some understanding of how to put together a plan, give us a call. You know, we'll do a portfolio analysis. We'll review your current annuity, and we'll come up with a plan. We'll tell you if you're in a good place, and if you're not, we'll tell you how to get yourself into a better place. And we're not going to help you do that. We're gonna do that with you. Okay? You know, that's how we approach it. Education is a key to what we do, and so give us a call. Come in. We'll also offer this book. Our CEO, Lance Gilman, Conquer Retirement is the name of the book. It's a great book, and it's for those folks who call in today.
Derek, Peter, thank you so much for being here and sharing your wealth of wisdom with everyone. And I look forward to more shows together. And thank you for joining us. Again, you don't have to go this alone. We know that a lot of this might be new to you. It's not new to Derek and Peter and the team of Northern Alliance Financial, and they are here to help and serve you. So again, we invite you to pick up the phone and call 877-241-7430. We love you, Maine. We look forward to being back with you next week here on Conquering Retirement.